Welcome to 12-Minute Talks, where important information is shared in a short time period. Learn from other business owners, entrepreneurs, and experts about what they do to help you find solutions to everyday topics in 12 minutes or less. Hello, I'm Lorena Tomasini. I'm the owner of Mom Life and Health Insurance Agency. Together with my mom, we're brokers and we represent different companies here out of Miami, Florida, and the entire state of Florida. I'm joined today with Joey Duhon. He's going to introduce himself now.
Hi, Joey Duhon with Highlands Residential Mortgage. Me and Lorena are going to share a little bit of information about once you close on your house, what mortgage protection can do for you and how it benefits you as a home buyer. While we're doing that, we're going to segue a couple of different things with the mortgage process so you can learn a little bit about just the way that the process is going, how things have changed from 30 years ago to now, and hopefully it's educational. So Lorena, thank you so much for having me. I really appreciate the opportunity to speak and learn from you as well.
Certainly. So we were talking earlier about some issues you were having with condos, and we wanted to talk a little bit about that and the differences between all the types of insurance out there. You have your homeowners, PMI, and you start getting letters of mortgage protection once you actually buy a property.
Yeah, so one thing that it's a pretty common question that I get coming across my desk up front is, especially with condos, is what all goes into your mortgage payment. So when you look and you break out a mortgage payment, it's typically four things. So you have your principal and interest, your taxes, your insurance, which is your hazard insurance, and then interest. I guess so, principal and interest put together. Either way. But when we're talking about mortgage protection, it's a whole different type, it's a whole different subset of insurance. So when talking about hazard insurance, that is simply put, that covers the building. But it doesn't necessarily cover your mortgage payment, which is what mortgage protection does for you, correct?
Correct. Mm-hmm.
Right. So with a condo, and like we'd spoken earlier about, working on a couple different condos right now. I've got about 4 that are closing this month. Condominiums have homeowners associations. Some of those associations have an HOA fee that you pay every month, and it covers certain things in your building. Well, one thing that people sometimes overlook is that HOA will actually cover the outside insurance. So that's already being taken care of in that payment, which in turn means your hazard insurance, or that one part of your mortgage payment, is going to be a lot lower. So if that's lower, it frees up a little bit extra space for mortgage protection, which we've talked about the cost on that, and it's super nominal compared to what you're getting for it, to make sure that you're covered in case something happens. So with condominiums, I think it's a no-brainer that you would need mortgage protection. For single-family homes, it's a great option to have as well. But can you explain to me kind of what all goes into mortgage protection, and then I'll explain hazard insurance and what that really covers?
Sure. So mortgage protection, it's really a life insurance that you get for the loan amount. So let's say, what is your average condo selling at today?
That ranges anywhere from 100,000 to 100 million in Florida,
okay.
As you know. But
right.
let's say for first-time home buyer, let's say you've got 80,000 in income and 5% down on a home loan. You're probably looking in the $200,000 range. So call it $200,000 condo.
All right. So let's say somebody gets a loan for $250,000, $250,000, right? For a 30-year loan, right? Which is what most people do. So what the mortgage protection does is you will get a life insurance for that same amount, for the $250,000, so that if the person passes away, the family can continue paying off the mortgage or staying in where they live, right? And it's not only if they pass away, but now the policies come built in with living benefits, which is even more important. What this cancer, heart attack, stroke, or some type of disability where they can't perform activities of daily living like walking, bathing, eating for themselves, they can actually use part of that 250,000 now to help them pay for everything else, right? The mortgage, the FPL, kids' clothes, whatever they need to do, so they can continue living and survive that.
Right. Which makes total sense. We see it happen sometimes. You have a situation where something happens to a family member that's in the house. They can't afford the mortgage anymore. Now what?
Right.
They're not covered, and that house can go into foreclosure. Well, if you have somebody else on the title, they end up losing that asset, which is something that should go to the family, rightfully so.
Mm-hmm.
They end up losing it or having to sell it, and they're not able to keep it. So mortgage protection is a really great way to make sure that your asset is taken care of.
Right. And it's something very affordable. A lot of times people think, oh, a life insurance for that large amount. But it's really nominal. Like a 35-year-old can get that type of coverage for like 30, 40 a month, And the older as well, it all depends on health more than anything. So it's something really affordable that people can afford.
So when you're looking at the breakout of your mortgage payment and you're looking at hazard insurance, on a $200,000 condo with the HOAs covering it, the interior, you're probably looking at another $50. So all in, you're paying $100 in insurance, and it's going to cover inside of your house and the mortgage protection, and you'd have your exterior with the HOA fee. So all those things wrapped up into one, you're sitting pretty good, I would say. I mean, even on a single family residence, if you're in a $200,000 house, South Florida, 300,000-400,000 if you want to be in Boca or Del Rey, you're looking at a couple $100. But add an extra $50 to make sure that asset doesn't go anywhere. It's a pretty good thing to have, I think.
Yeah, it's definitely a good added value service to offer your clients as well, so they don't lose their asset, right? I mean, it's hard enough getting a loan, qualifying for a loan, and all of that. So it's not just getting that property; it's also being able to maintain it, no matter what life might throw at people.
Exactly. One of my real estate agents actually talked to me about, just life insurance in general and other types of insurance, and I think this is one of the best types because it maintains something that's of value in case something happens to you and you can't, just pass it along to your family. I think it's just a really wonderful thing, and it's not expensive, so that's kind of a win. Speaking of, breaking out a mortgage payment, we had talked about, the buying versus renting and what the value of buying a house can do for you. Because when you look at your interest and your closing costs and all those things that go into a home, you can write all that stuff off on your taxes anyway. So I started to look at buy versus rent, and that's something that first-time home buyers, a lot of people call us up and they're really skittish and they're like, well, I pay $1,500 in rent. What does that look like as a mortgage payment? So what we have in our office is a really good tool for home buyers to look at and say, okay, I'm thinking about buying a house. I pay X amount in rent, and I want to go buy something. Well, how do you mathematically put those two things together? And it's actually a really easy program. It takes like 5 seconds to do it. So I'll pop over on the screen share so you can kind of see it.
Okay.
I can tell on this, I've basically set the parameters at a $300,000 house. And I don't know, can you see that?
Okay, there we go.
So if you called me up and said, hey Joe, I want to take a look at what the $2,000 monthly rent would look like as a mortgage payment. So you have your basic, rent, $2,000, your renter's insurance, $50. And your total payment is $2,000. Well, comparatively, we'd look at your buying price, and I set this one at $275. The mortgage amount, I put the minimum down possible at 3% for a first-time home buyer. At a 4.75 interest rate, it's assuming your credit's pretty strong and solid. 30-year fixed with $5,000 in closing costs. Figuratively, you can probably assume that'd be somewhere between $5,000 and $10,000, just depending on the purchase price of the home. It adds in everything: your taxes, your mortgage insurance, your homeowner's insurance. So, like we talked about all the different kinds of insurance, this would be your hazard insurance, Mortgage insurance would actually be, if you put less than 20% down on a house, it's just to ensure that the lender is covered. That doesn't cover you for anything else, just the lender. So mortgage protection and mortgage insurance are two totally different things. Keep that in mind. And then basically your net gain of buying a $275,000 house, and over time what that does to put money back in your pocket. But for the short term, if somebody called me up and said, well, if I had, $2,000 rent payment, what do I need to get into a house? I can pop these numbers in and say, look, 2,050 is what you're paying. 1952 is what you would be paying if you put 3% down on a house. So, and 275 purchase price that's a sizable house in South Florida, especially for a first-time home buyer. It's pretty standard, 2-bedroom, 2-bath. Just depending on the area that you're in, always consult your real estate agent. Can't say that enough. But if you have a question before you contact an agent, give us a call. That's what we're here for, answer quick questions. So what would be the process for getting in touch with you on mortgage protection? Like if I have a client, they're getting ready to close on their house, do they need to contact you after they close, before they close? Like what's the best way to go about that?
Usually it's after they close, because that's when they're going to start receiving a ton of letters about mortgage protection. So it's very simple. They can just give me a call and I'll give them the quote over the phone. I do everything virtually, so it's very easy for the clients to work with me.
That's awesome. Well, very cool. So there you have it. We have buy versus rent, different types of insurance. Got any questions? Give us a call. Great talking with you. Have a great day.
You too. Thank you for listening to this podcast and hope you will listen to the next one. I'm Lorena Tomasini and you can contact me via email life@malmins.com. Make it a great day.